One.
Honestly, what did Powell say yesterday that you haven't heard on pre-market prep for like the last 2 months? They're not done fighting inflation. There may be another quarter. There may be another half. Rates aren't going down in 2024. If you're going to give a mixed earnings report, you better have good guidance. FDX versus KBH, IPOs destroyed, Cisco buying Splunk. We got one heck of a show for you today. Let's get pre-market prep started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Morning, traders and investors. Let's run down the futures here. Week close never got over that closing print, 44.47, trading off the lows of the session, down 35 handles, 44.12. Buck clears 105, up 52 cents, 105.31. Bonds getting pounded down a point and a half, making a new low of the move. Crude under 90, down 42 cents. Everyone hates gold, down 27.80 at 1939.30. Silver in the red by almost 50 cents and nearly 2% at 23.38. Bitcoin futures, they're hanging in there. They're down $190 at 26,800. Let's bring in Triple D here. And Triple D, I want to rant. I mean,
Go.
What new information did you get yesterday? What
Nothing.
new information?
No, we knew that. We knew he was going to be hawkish. I mean, the market was stupid for starting to think that he was going to talk about pivoting again. The market continues to be just ignorant to it. Wants a pivot. But it's your rant, Joel. I don't want to take over because it upsets me too at the market. The market is dumb, Joel. It doesn't price things in. We've said this for a while. It doesn't. It's got like pivot on the brain. It's like we're in the end of the cycle. He's going to hint at pivoting, and we're going to rally, and we're going to make new all-time highs, and it's going to be so exciting. No, we're not. We're not. We got interest rates high for a while. Here is the truth, Joel. The interest rates are going to stay elevated until the economy tips over. That's what's going to happen. Yep. That's what's going to happen.
So
in either way, it's not good for stocks.
Nope. And the other thing too, I mean, Powell in there. I mean, come on, give the guy a break. I don't care what you think of his overall situations, but the media, they just kept on throwing questions at him, just getting to say, yeah, we're going to pivot, or yeah, we're going up a half. And he just is
they wanted him to say it.
I know. I mean, to give the guy a break. Look what he's been dealing with in Washington since he's been there in 2016. The guy deals with the pandemic. I mean, give him. I mean, I don't know when his term is up, but holy mackerel, that guy is going. See ya. I mean, he's got the toughest job in the world there. Yeah. I mean, why stick? I mean, I'd stop doing the conferences. I'd be like, here's a rate decision. Do what you want. Here's the information. Talk to you in 3 months. But man, it's hitting the market. But man, we got other things to cover. I mean, did you think you would see a big time deal in the tech sector? Look
Not
at
right now.
Cisco.
Timing of this is very interesting. I mean, You've got obviously, the stock market teetering here. This should help. I mean, some stocks, you'd think some cloud would get some love off this. We're not seeing any real sympathy moves here, but give us the deal of the news. Bring in Money Mitch here. Give us the news. It's a big deal. Broke at 7:45 this morning, so 20 minutes ago here. What's up? Money Mitch. Is you in the background, Money Mitch?
What's going on, guys?
What's up? You're hiding on me again. You're always hiding.
Joe doesn't like to bring me on early. But let's get to the action.
We like you on. Get on here. Tell me about this Splunk deal.
Cisco to acquire Splunk to help make organizations more secure and resilient in an AI-powered world. Proposed deal for $157 a share in cash, representing $28 billion in equity value. Who got the better deal here, Splunk or Cisco?
Definitely not Cisco shareholders are getting hit here this morning, but This was rumored last year, not Cisco to be the acquirer, but Splunk was rumored a couple of times to be bought last year. I can remember talking about it on the show. So this has been rumored around. I don't know if anybody was speculating ahead of it. Obviously, it had the earnings gap there back in August, and it held
Yep.
that pretty well. Really wasn't selling off with the overall market, so technically it actually was relatively strong. Sometimes you see these deals and you're like, well, nobody saw this one coming. I mean, they were buying this thing. It really wasn't selling off. Even the last few days didn't sell off much. So definitely seems like some sneaky buyers in here, but holy, 157, nice premium here, Joel. Cisco, probably the stock to get talked about now because this is going to go off the board. The Splunk deal 157. I don't see a lot of antitrust issues here, so I wouldn't be surprised if you do see this pop substantially, obviously maybe into the 150s. I don't think there's going to be a big discount here for antitrust. Cisco getting whacked, down $2 here, paying a huge premium. All cash. So there goes a lot of their cash, Cisco. Thoughts? One on the premium, two, Cisco trading action.
Wow, it's we're first of all we were looking for peers, and it's tough because the peers we were looking at are some big old companies, your Adobes and your CRMs. Secondly, full disclosure, I've owned Cisco for a really long time. I think in the low 40s. I've just watched it go up and down. Hasn't been a great, a super great investment, but I'm up on it. This doesn't really change anything. I kind of like the move. I mean, they, in this environment, they must be extremely confident that this is something that can really add to the bottom line. And when's the last time Cisco made a deal? I go,
long time.
Yeah. So the price action is, they're hitting the acquire. I don't think anyone's going to come in at a higher price. Technically speaking, if you got caught short in the earnings gap, well, this is your opportunity as that gap gets filled at right here. What's the high on that day? Oh, way up there at 53.52. So if the street likes this deal, and I don't know if it's going to be today, tomorrow, next week, it's gonna form a base. It's gonna form 3 or 4 lows. It's gonna find support and turn back higher. If the street doesn't like the report or doesn't like the deal, then it won't see 55.50 for a while. But really, on this kind of day too, like when announcing it, the market circumstances and everything,
Yeah.
it's a bull move. I'm happy as a Cisco shareholder. I'm happy. What that means is probably not a whole lot.
Maybe long-term happy, short-term traders in Cisco obviously are not happy if they're long it with the stock getting hit down $2.40. I mean, it's been relatively strong, very strong. Old school tech has basically, in kind of value tech, lower PE tech, has actually been relatively strong compared to a lot of other stocks here. You're getting whacked. Is there a spot a technical level here? CSCO. Throw it back to you, Money Mitch here. You do the technicals as well, obviously, and do a great job with them. Is there a spot you'd be looking at this, from a retracement standpoint of maybe buying the dip here? Or are you just hands off on something like this?
You got to let it kind of leak a little bit, give it some time, get some sideways action, because right now you're kind of in the middle of the monthly charts. And when you're in the middle of the monthly charts, what are you? Pretty much probably a pig right now, right? Whether you see it like that or not, I never like to be in the middle of those charts. So you guys see the right chart, you're in the middle of it. That's the problem there, is that I don't feel like you're with the Bulls or the Bears. You're kind of in between.
I'm just not in the buy-in mood either. I think $50 maybe, if you got down to 50, maybe you think about it, but I just don't know if I'm in the buy-in mood for anything here. And I'm not surprised that they're punishing this. I'm actually surprised. It's all cash. If it was a stock deal, they'd hit it more, because sometimes on the stock deals, obviously, now there's risk arbs involved, bringing stocks down so they don't have to bring the Splunk up as much. So the whole cash deal helps it, but big lot of cash gone.
You want to talk about old school tech, and you want to talk about the most surprising chart that I've looked at in the last couple months?
Yeah.
Beamer. Have you
I
seen
know
this?
It's been hot, yeah.
Yeah.
It don't slide by, Joe. It don't slide by us all. I've seen that bad boy too.
Yeah.
Yeah. Look at that thing.
It's
I
because
mean,
Dennis sold it. That's probably what happened.
I've got a long position in the trading account and a day trading account. So just full disclosure, I'm actually going to sell out of it. I've just coincidentally got a day trade long on it because it has relative
you were
strength.
doing this as an investment too a little while ago.
Yeah,
right?
I had it from 135 and I sold at 143, and obviously shouldn't have sold. The same thing, Money Mitch. Me and you always enter okay, sell way too early.
It happens to the best of us, man. It does.
I don't even think my entry was great on that one though. It took some heat on it too. So
yeah, it was after
I went in the
earnings.
cash raising mode. Remember, like a month ago, obviously way early again. But I went that cash raising mode and I got rid of my Micron and my IBM and my Airbnb and my what else? Half my AMD. Remember, I sold on that one day. I sold a whole pile of stocks. And honestly, I wish I would have kept selling even more stocks. Although this IBM has been up substantially from there. But AMD's obviously fallen off a cliff since I've sold that half size position. Wish I would have sold it all. I sold my General Motors at 39.
That was a good
sale
one.
too.
That was a good
You know,
one.
you're in a bear market, and people are going to say, we're not in a bear market. I kind of feel like we are. Again, I don't do the technical definition of 20% from the highs because if you're trading bear markets off that technical definition, by the time you actually start selling stocks because you're in a bear market, you actually are already through most of the pain because stocks don't often fall more than 20%. Now sometimes they do in COVID. But I do feel like the bears are in complete control here. They've been in control for a while. Probably for the better part of a month, really. I mean, we had the rally in August, but we sold off, didn't make new highs in the August move. Nvidia's broken down. I mean, head and shoulders all over the place on multiple time frames, multiple stocks. It just seems like the bears are in control. And that's why I would call it a bear market. So
it's all the time
with that
frame.
being said,
yeah.
you're in a bear market when you sell a stock. And then you look a month later, you're like, oh, I'm glad I sold that. Where when we were in 2020, you sell a stock, and you're like, oh, why did I sell that? That's the simplistic way to figure out if the bears are in control or the bulls are in control. Pretty happy I sold most of those stocks, Beamer being the exception.
You know what? We've had a couple mentions here of selling on Rosh Hashanah and buying on Yom Kippur. And a lot of times it's just the timing of what happens that if you want to go back and look at my article from last Friday,
Nice.
I mean, it's been a pullback and it worked like a charm last year. But last year, when market was absolutely getting crushed coming off, higher levels. So it's a different situation. We can look, it's actually the day would be next Tuesday if you're going to stick to the seasonality and the actual term. But I just want to preface, man, it was a lot different last October when you were doing it. I mean, just look at the chart. Look at the SPY monthly chart. I mean, this is September and October last year. You were coming down here. Now you're coming. I mean, you're working off 2 red candles here. You're up in July, a red candle in August, looks like it's going to be a red candle in September. So, I mean, it happened to work on one side. I don't know about the other side, but it's negative talk as we're having here. There was a really positive earnings report. And, Mark Chaikin and other people have said FedEx is a bellwether of the economy. I don't know if I totally agree with that, but look at FedEx on a day like this, trading up over $13.
Mitch, how'd they do?
FedEx Q1 EPS at $4.55 beats the $3.74 estimate. Sales of $21.7 billion missed the $21.81 billion estimate. They do see fiscal year 24 EPS at $17 to $18.50 versus a $17.50 estimate. So not too far off of that. But of course, what's playing into this? Of course. Well, with UPS incurring a $30 billion hit due to the 5-year wage and benefit agreement, investors are now looking for FedEx to emerge as the victor in this private sector, right? And another thing to keep in mind is that FedEx has been doing what? They haven't been adding to expenses. If anything, they've been promising a $6 billion cost reduction initiative. So they're cutting costs while UPS is increasing costs.
Trying to become best of breed, really, what they're doing here. I was nervous about this report, wrong, obviously, because the stock has popped up 13, 14 points. What's interesting, I find here is, maybe to your point, Mitch, UPS not getting any sympathy move off this at all.
Mm-mm.
Again, maybe it's because they already reported FedEx the last report, so we kind of know the UPS earnings already. But usually you see a little more than 30 cents. I mean, it is a rough day for the market, but FedEx up 5%, UPS is up 0.24%, so nothing to be had. I don't want to chase anything up 13 points. I mean, you look at all the stocks, if you were chasing moves, even like Airbnb getting added to the S&P, and we talked about that being a selling opportunity, it kept going up after. It went up another $10, but now has cratered. BX was another one that was added, Blackstone Group. I think that's a sell. I just think chasing stocks when they're up 13, 14 points might work in bull markets, but the bears are in control, man. I'm not chasing it.
The thinking about it is FX. If FedEx a fade, I don't know if I can tell you exactly it's a fade, but if you came in long the thing and you had a target of 263.76, well, there's your target. Pre-market high comes in above that level. Or excuse me, the after hours high, they jacked it to 265.99. So that could be another target on the upside. The only thing sticking out to me on the dailies is I don't like to give you something unless there's a pair of highs. And there's a pair of highs at the end of August splitting 264.70. You're under that right now. You've already traded above it, but man, nice move going against the market. And then the fundamental thing I'm going to say about this is you can cut costs and you can cut costs and they can add to the bottom line, but you can only cut so much. And then you got to have more product and you got to have better sales and everything. So they're doing things the right way now. The party's on and up 13 bucks, 5%. Market down less than 1%. Big move for FDX.
Splunk
Tech
did
drama.
reopen just before we go to Splunk. Just reopened. I believe it opened up at 149. It's 146 here right now. You do have the time value of money to consider. Remember, you never go 157, 156, 155 because the time value of money is real, folks. So you got to knock that off from your price. Obviously, risk ours maybe a little bit. You're 10 points down. But, if the deal, so 10 points on $146 stocks, about 7-8%, there's be a little bit of risk, that the deal may not go through. So the risk arbs will throw that in there. And then the time value of money is why $3 or $4. So maybe that's how you get in the 146. So I may have been a little bit high when I was thinking it was going to be at 150.
Yeah, no, that's a nice pop. I mean, that $10, I antitrust. I mean, I don't know. I think they probably did their
Too
homework.
many companies, too many cloud companies. I don't think they have a case against this one.
Okay. All right. Trading 146. I mean, I don't know. I don't know where to buy it. 145 is the level it hit. But I think also you see in these scenarios that if people have been in this thing since, let's say late 2022 and wow, it was 120 yesterday, a little worried about the market. I could get out of this at 146. All right. I'll let the other people worry about I'll let the risk arbs worry about the last $10. Maybe put your money somewhere else to work.
Well,
like
that's it. When you've got the time
T-bills.
value of money, it's a serious consideration. When we looked at
Never
these risk
was.
arbs, cash deals would trade almost to the price. Sometimes they'd go above the price because people speculate they might even get a better price. That isn't happening anymore. There's not like multiple bidders. Maybe US Steel has some, but this US Steel keeps, like now they're saying with Cleveland Cliffs don't know if they like what US Steel is doing either. You're sitting up there trying to get multiple bids there. But I mean, when you hang around and you start rejecting and not opening your books and doing stuff, eventually if those bidders all decide to go away, that isn't good news either. So, I mean, I don't think there's another bidder coming for Splunk here. I don't think risk arbs are thinking that. And then you got the time value of money. So you got 145.
We're still leaking here, Dennis. But just right from that opening,
Yeah.
6 p.m. opening here, falling into an area of limited support in S&Ps. There's very few days where I wake up in the morning and I have to adjust my sheet down another 30 or 40 handles. I thought we'd maybe find a bid here at the 44.12 and a quarter area. It's not that far away, depending on what your risk parameters are. But man, oh man, it's just like it's just death by 1,000 cuts here so far in the after hours pre-market sessions.
Tech drama is taking center stage as Broadcom shares plummet more than 5%, sending shockwaves through the market. Of course, a job dropping report here from the information suggesting that Google might just cut ties with Broadcom, its AI semiconductor supplier, by 2027. Sources close to the action even hinted that Google is potentially designing its own chips. That's not all. The plot is thickening here as the report spills the beans on Google's secret to swap Broadcom's interface networking chips that are crafted and soon to be crafted by Marvell technology. So they're looking to swap out Broadcom for Marvell technology. Marvell's getting a little bit of a lift here. Is it still up? Because I know that the market's dragging it, but
normally these are buying opportunities. In normal markets, I'd actually look at this as a buying opportunity for AVGO, but we have bears fully in control here. You're taking out some support. That's the only thing that would make me skeptical. Definitely not selling it in the hole here. But normally I would be like hungry. I'd be like, yeah, this is a good dip to buy because I'll probably buy this right back. But with bears and so much control of this overall market, it makes me hesitant to put on that, to come in here and just call the bottom an AVGO. But I do think this is more of a buying opportunity than a selling opportunity.
Oh boy, I'll tell you, this AVGO, I just cannot get this earnings report out of my mind. If you're looking at the upper right chart, right here, this is the day that it made its all-time high. People just piling into the stock ahead of the report, and I think the report was good, and they got stuffed on it, and now
Yeah,
they
they
got
did. Now they're
and
stuffed again.
yeah, yeah. I mean, I don't know. I mean, you can look at the chart and you can say, oh, well, 776.38 was one daily low on June 6th. So once again, if that's wow, it traded under 770, Dennis.
We
It
were
traded,
down there, yeah, 768s. I saw. Yeah.
I saw 760.02.
760 we got down to. Whew.
Yeah.
So they're already buying the
Oh,
dip a little bit.
yeah, they are. Only me and
Man.
you can look at a chart. It's not down 50
Yeah,
cents.
down 50 and say it's not that bad.
Of course, I don't know this one.
AVGO, I'll say this, Broadcom is on my shopping list. I love the pullback. I wish we were in like, more stabilized markets here right now, but I feel like we're not. I feel like the bears have taken just total control and I want to sell rips right now. So I'm like, I just can't bring myself to add risk to the long-term portfolio. I'm half cash and I wish it was all cash. Hindsight capital is obviously 2020, but obviously wish I was all cash, but I'm not. I just not in the
Is this a
buying mood right now.
rumor? Is this a rumor or is this like
No rumors, Joe. Yeah, no, just
Oh,
rumors,
man.
information. It's crazy. Like I said, this under normal conditions, I'd be a buyer. You know what? You probably should be a seller Marvell on this because it's up 3.6% on this, and we're in where the bears are in control here. It gets a nice relief pop here. Maybe it gets to 56 or 57 on silliness today. I think I'd be more of a seller than Marvell than a buyer of AVGO.
There's a big old gap. Big old gap in this one
well,
too, in Marvell.
are you a buyer of homes right now? What about KB Homes?
No.
Q3
Definitely not.
EPS here at $1.80, beating the $1.43 estimate. Sales of $1.59 billion beat the $1.48 billion estimate. KB Homes raised fiscal year 23 housing revenue outlooks for $5.8 billion to $6.2 billion, and now raising it to 6.31. So that's where it was at, 5.8 to 6.2. Now raising that to 6.31. I think they're selling some homes here, and I've been seeing this. They're trying everything they can. I'll tell you right now, at least being in a place like Charlotte that is still growing and can have room to grow, you're seeing so many apartment complexes being built, housing being built. They're pushing hard. They're pushing hard right now.
They're pushing hard and they're doing things. What is this? And I just caught it in passing. I'm not following the story closely enough. But what is this? And chat might be able to help me. They're talking about it on CNBC yesterday. What is this about the home builders paying part of the mortgages for the people who are buying them?
So
I heard they were picking up like 200 basis points or something of interest.
So
Is
what
that
happens
true?
is a lot of the times is that, Dennis, these housing companies work with lenders, right? And so they try to
Yeah.
establish lending that's cheaper than what you could get if you went for,
Yeah.
let's say, a used house, right? We'll call it a used house, right? Because
Yeah.
someone that's already owned it. So if you went for those loans, you'd probably get like, let's say 6 to 7%. Maybe these housing companies can offer like, let's say 5 or 6, something like that, take a little bit off the top to make it seem interesting. And that's why people are going to them right now
To
in a
make it
time
affordable.
where it's just affordable, right? A little bit
Yeah.
more. And it's a brand new house, right? And so they
Yeah.
pitch you on that.
Yeah.
They're definitely getting people right now.
It's
That's
it's
how they're
it's called.
keeping it going.
This is how old school I am. I think the term is like buying points, mortgage points. And I can remember, when rates were like, double digits and 11 and a half. But yeah, you could buy a few points and get it down to 10 and a half. And you had to kick out some money, and who knew rates were gonna go as low as they did. So that's a good point. That they're doing it. I'm just going to these stocks they've rallied in the face of just what we would think would be horrible fundamentals because of rising interest rates. Now rates, are going to be higher for longer. I think it's just really hard to be trying to buy these dips on these things. I think I'd be more inclined to sell rips. Do we have a monthly low? We're breaking our 2 month
Peak
low. And
cycle's
boy,
over for this, man.
yeah. Whew.
Value. I've been wrong
But
on the home builders, though,
Warren just got
the
in.
whole time.
I know. I don't know why Warren did that. I got to call him.
Which one did he buy?
I think he bought all like 2 or 3 of them. I'm going to look it up, but
DHI.
I'm pretty sure it
Value
was 2
guy.
or
There's
3 of
good
them.
value in them, but I think it's a peak cycle. It's
That's
like
the hard
GM
part,
and Ford.
right?
I think they're peak cycle, even when they settle the strikes. And I mean, that might be a good conversation to just segue into. But even when they settle the strikes, the Ford and GM, I think they get a little relief pop, and then they just start their downward trends again, because I think they're peak cycle. I think they're gonna have a lot of trouble. And I think home builders are at peak cycle too, and they're obviously keeping it going by helping with the financing and doing all that. Maybe they always did that, but eventually these interest rates are coming. They're here. Eventually people are gonna start to have less cash. Talk to the airlines. Talk to some of these
What's
other
happening right
companies,
now?
retail. So many stocks just been like, look at Macy's. You see Macy's?
Oh,
The good
is it
start. You see
single-
Macy's?
single digits?
$10. I mean, everybody was telling me, "Oh, how do you go wrong with Macy's?" I saw this in my timeline.
Real
It was like
estate. They're real estate.
$27. They have all this real estate and the dividend. I think they cut. Did they cut the dividend? I feel like they did. I feel like they cut it back, and now it's
Well,
back at 6%
if they
again.
haven't, they're probably thinking about it now.
I think they cut it, Mitch, and I think they're going to cut it again. I
Yeah.
mean, Macy's and everybody telling me Kohl's, and I remember I sold my Kohl's and I sold it way early, but then it went 28, people 30. It's going back to 40. No, it's not. It's going back to teens. That's what's happening. These brick and mortar retailers have always been having some problems. Nordstrom closing stores. We had this rant the other day, but I mean, there is a tale of two markets here. Like we have been held up by the Apples and the Microsofts, but IWM, and I'm long some IWM, that long-term portfolio. We are not far from the October lows. We're starting to come closer to that than we were to the highs. So 162. I guess we're a little ways off here. Yeah. But we are looking like not good at all. And that's 2,000 companies. There is a lot of stocks that look like crap. Now there are some stocks that look good.
Yeah.
Old school technologies held up well, but there's a lot of stocks that look like absolute crap.
Yeah, I could see they cut it in half. It looks like they cut it in half.
They
from
did cut
20
Macy's.
Yeah, at least I can
The dividend?
see here it was at like 37 cents in 2020 on March, and then at 2021 in September it went to 15 cents.
They cut the dividend.
So they
Already
cut
in
it. It seemed
half.
like in half.
And now they've fallen again. This is the AT&T, of
Yeah.
The department stores here. The problem is all the department stores are AT&T, all these big ones, unless it's Dillard's, which we don't. We obviously had Ryan Craver on here, and he was saying Dillard's is its own thing. I have no idea what the hell Dillard's is
I
all
know
about.
it was fun to get him on. How about turning down $62 or $65 in Kohl's? Remember that? They
They
nah.
didn't. They were trying to get it. Do I remember that? That's why I got beat up, Joel. I bought that thing at like 40. It went to 45, and I thought there was going to be a deal to be had. and there was no deal to be had. And then I sold half of it at 35. I should have sold it all. And then, I ended up selling the rest of it like 22 or 23. And I should have sold everything, obviously. And, I remember that? Yeah, I got the crap kicked out of me playing that deal, trying to say, yeah, they're going to get bought. It's going to be a premium here. No, they wanted that premium. They needed that premium. And now they got problems. 9.45% dividend looks pretty good, but I don't think it's safe.
Watch your bids, Dennis. Watch your bids. We got jobless claims here.
Stop going down, market. Man, I did that rant yesterday morning. I didn't want it all to happen imminent. I wasn't looking for this thing to just fall 70 handles after I had that rant, which is exactly what has occurred from this time yesterday morning. I wanted a little bit of pop to sell more stocks.
There wasn't much pop.
There was no pop to be had. So it's come. It's hit us. Bears here in full control. Now,
you must have read my rap from yesterday.
What's your rap?
No, my rap.
I read your rap every day, Joel, but tell me about which part.
I said Bears in full control. That's what I said. They are in, there was I thought they were going to be in control on Monday, after the quad witch, the week close. And then they have that one or two sneaky days ahead of the Fed. But right now, the Bears are in control until otherwise notified. The Bears, the Bulls.
I think a big part of this, and I think eventually we're going to hear all about it, right, is just look at the banks. They're still not talking about it. I think you're going to hear, like I talk about it all the time. They love to talk about it when it's too late, but the KRE keeps leaking.
Back down, man.
The bank's leaking.
Yeah.
I feel like everyone's just so focused in AI, caught up in AI, that they're just not even looking at the banks anymore.
No.
This is where I think the story is going to expand.
There are so many problems under the hood. You imagine, and here's my prediction. I believe that the Fed's path that they outlined, cutting, later in 2024, is going to get moved up substantially. I believe we're going to get cuts in early 2024. And why is that? Because this economy is going to go kaplooey. That is what I think is already happening. I think the stocks are telling us that. I think the stocks are telling us that we have got to slow down. FedEx, good earnings. FedEx, guidance was fine. I did not see them, having that good of guidance. And the consumer has been unbelievably resilient. But I just don't know if they can continue it. And I think the stocks are telling us that this is for real this time. That the interest rates, and they talked about Ken Griffin saying, year to 2 years lag sometimes on that stuff.
Yeah,
well, you're falling into that period, coming into that year right now. So maybe that lag is here. Tommy Lackey talking about the second half being a lot rougher than the first. Spot on this show when he talked in January. First half, excellent. Second half, not looking nearly as good so far. Can we give it all back? I don't know if we're going to give it all back. Again, the Fed has a lot of bullets in their chamber, so it's hard to get really super bearish. That's why I hold some stocks, but a lot of me, and again, you can't come and selling today. Now you just dropped 80 handles in 24 hours. You're doing it now. You're doing it backwards. Wait for a pop. There's going to be another pop. There'll be something. This market's not just going straight down in the recession set. It's going to be pops. But I think on the pops, I think you got to be selling stocks.
All right, let's expand this conversation with our guest today.
We got Roggy Horner on the line. She's the managing director of futures trading over there at Simpler Trading. And when we get all worked up like this, it's always good to bring in a calm, smoothing voice of reason. Calm down, guys. The end of the world's not coming.
Please.
And that's a pretty big responsibility. I'll turn it over to you, Roggy.
With great power comes great responsibility. So I am great to see you all. Thank you for the world's worst lighting today. It is it is an interesting, I was listening to you all, and I think back on seasonal trends, and I don't know how many of you guys look at the seasonal trends, how many of the the audience looks at seasonal trends. The last 5 years, by about September 16, we start that move lower. So August is absolute chop, range bound, and August did exactly what August behaves like historically. July did exactly what July was supposed to do, which is straight up. So we come out of July thinking, yay, we go into August and we need a Dramamine. We come into September. So the last 3 months have absolutely organized exactly like the seasonals of the last 5 years would suggest. And I'm looking at, so the question is, okay, Rod, great, but where's the reprieve? So if about the 15th to 16th starts that move lower, we are not going to get a reprieve until the end of the month, likely October. But if we think about the phenomena, for me, I look at Q3 to Q4. Now I'm thinking I'm an asset manager. I've got however many millions under management. I've got Q4 to look like a superstar. I start buying stuff that's cheap. I start buying stuff that's on sale. And if you look at the seasonals, once again, we'll chop around in October, but we actually start to rally towards the second half of October and into November, where we chop around some more. But I'm actually looking for stuff to go on sale. If this is what September normally is like, great. Where are the blue light specials? How can I position myself with that expectation for the early October rally? That's what's going through my head.
Roggy, how do you not be too early? And that's the issue here is, we've got stocks in the last couple of days in a little bit of a free fall here. I mean, Amazon's down $10 in 2 days. So this is a serious sell-off. Obviously you've got other stocks that are down too. Microsoft had a terrible day yesterday. Key reversal, stock goes down, $12 in 24-hour period here. How do you not be too early, or do you just, buy and you take some heat and, eventually we're going to pop back up? That's my concern is I'm kind of with you. I think eventually it's going to be a great buying opportunity here. Timing that, sometimes really difficult.
You're so right, because I love that you said too early, because too early is the same as wrong. Right? We like to talk about early and late. So how do we make sure we're not on the wrong side of this? So I'm going to look for 2 things. Number one, if I'm going to buy anything on sale, it's got to be above the 200 period. It's got to be, because that sentiment shift along the equator, if you think about the most common types of scans, and I'm, as much as we want to complicate technical analysis and charting, and I've probably been guilty of that too over the last 35 years. But at the end of the day, there are some really basic places that I look at on a chart. Am I above or below the year's point of control? Am I above or below that 200? I prefer the exponential, nice recency bias built into that math. I will not buy stuff just because it's cheap. So how do I prevent being too early? I can't start buying until early October. And how do I prevent being sort of too early and wrong? I can't buy stuff below the 200. And that served me. And then I remember, look, when people say, oh, the market's rigged. Yeah, it's rigged to the long side. And you're exactly right. If we start to see that meltdown, right now, when I look at Fed Fund futures, I know everyone can look at that right here, CME Fed Watch. We're not even seeing a 50-50 shot at a rate cut until July, which is bonkers. It was closer to March, May, not but 6 to 8 weeks ago. We're going to see the Fed Fund future start to put the screws to Jerome Powell and say, look, this is what we're expecting, and this is how we're communicating it to you. You got to cut sooner. We get you're not going to cut in 2023. That was never really a probability. But now you've moved it out to July, and we're ticked off, and we're going to let you know.
Raghee, I know you've had some nicknames for Jerome Powell. I called him Pumping Powell for a while, and I know you've kind of played on that theme similar. I mean, come on. I mean, the guy's to me, he's in between a rock and a hard place, and the position he's been in since 2016. What would you do differently if you were head of the Fed?
Oh my gosh, it's so easy. It's so easy to mock Powell. I actually don't have a problem with him. I think he learned. And if I look back on Powell versus Greenspan, don't get me started on Greenspan. Yellen did what she did. The Bernanke did what he did, but I don't have a big problem with Powell. They have a very difficult job. My job is, unless there's Powell futures, I can't trade him. So what I'm going to remember is until he gives me his S&P target, which ain't happening, I've got to remember 2019. And how many of you, before 2020, 2019 Q1 was when Powell in Q4 went a little too far. He hiked one more time. He defied the Fed Fund futures. I don't think he's going to do that again. He remembers really clearly what happened when he hiked one too many times. And then he uttered on, what was it, one of the television stations where he, Bernanke, and Yellen, and he uttered the word patience. And that was the bottom. I don't think he's going to defy Fed Fund futures again. And I think he learned his lesson back then.
All right. Now, of course, one thing that I've been seeing is the consumer starting to slow down. Are we just now getting to the recession that everybody says, well, at least most are saying that we already passed?
I'll tell you what, my friend Mitch, what the heck's a recession anymore? Because we had one, really, if you look at the GDP from quarters and quarters ago. So what's really interesting to me is that word now means nearly nothing, because none of us know what it is. Before, we had a measuring stick. I will say that's probably one of the oddest things Powell chose to do, which is somehow redefine what a recession is. So now it's whatever they think it is. I don't know. So that's one of those things that our word doesn't mean anything, because all four of us, what is it? I don't know.
One thing that I would mention is that they're saying they're data dependent, but it seems to me more like they just can't analyze the data that they have.
The data that they have is very interesting, right? We look at the models, and if anyone wants a really good laugh, and I know you guys know this, Google the difference between CPI and PCE. Even better, go to Chat GPT and ask, hey, what's the difference? And you'll realize, if anyone hasn't done that, and for those of you that have, PCE is what they use for their models, personal consumption expenditure. And if that PCE is the real world, it ain't Earth. It ain't the world that we live in. CPI is a little bit more reflective of that. So we think of what their models are based upon. We can see why their numbers seem a little bonkers and their opinions seem bonkers from time to time. So I look at it that way. That's what their models are built upon. I can judge whether that's good or bad, or I could just trade it. And at the end of the day, I don't get paid for judging. I get paid for putting on a trade and being right and managing risk. So I try to remember that and just keep slogging through this mess that we have.
Raghee, I want to take it back to something you said just a few minutes ago here, and you talked about not buying stocks below the 200-day. And I mean, that's such a good tip here, because it stops you from ever trying to catch the falling knife. So you're never, ever trying to catch a stock when it's going straight down, correct?
Right. So there's 2A. So let me add a little bit more to that.
Yeah,
everything's time horizon. I find whenever there's a disagreement amongst traders or whomever, it's a difference in time frame and time horizon. So if I'm talking to someone looking at a 1 hour chart with a 2-day time horizon, my take on, say, a daily or weekly is going to sound bananas. So when I talk about a 200, it's on the daily. The other level that I like a lot is the 200 on the weekly. So if we come down and meet the 200 on the weekly, I have probably built over the course of 3 decades. That's probably my most common trigger, when a weekly chart is at least either choppy or in an uptrend and meets that 200 on the weekly. Again, exponential. So you're absolutely right. I don't want to buy stuff south of the 200. And if we want to add another layer of that, so that's just price, right? What if we add something like an anchored VWAP? What if we start looking at volume-based levels? So if I can add those two things together, price and volume is the only way to coattail the money, right? Not price. I want to know what the size is. I'm never going to be there first. I just need to make sure that size is there, and I'm going to coattail it. So those are the two things that I found work best for me in any kind of environment.
Yeah, Roggy's the one that gets all the meat. Yeah, it's because I'm the one that always tries to catch the turn, and I take that first bite. And then I get out too soon, and I leave all the easy money for Raghee, man. I gotta start being more like Raghee.
Hey, I'll tell you what.
We always take the first bite of something. We leave all the meat. We leave the meat to Raghee.
Hey, but when you are right, your risk reward is going to be far better than mine. So I will say that.
The risk is high when I call those turns. The reward might be pretty good sometimes, but when you're trying to call a turn, the risk is super high.
That's just in our blood, man. I'm a
turn trader.
Yeah, but the best thing about Dennis is what and for shorter term trading is not if he's long something and he catches a turn, he'll flip into a short. And that is for me, it's like, oh, I was long, I shorted it, now it's still going up. Oh, I should have stayed long. And that's ability. But this is a really interesting discussion we're having here, because on Monday we had Tim Quasta, and he shows us his different filters. And he had no stocks in his momentum filter. There wasn't one single stock that was in his momentum filter. And he said, that's sometimes a sign that, there's no momentum in the market. I'm going to flip this to you. Like, how many stocks are in that 200, weekly moving average range? Is there a big universe? Is that something your research on the weekends? Because I'd be interested to know how many are in there.
So I was looking at XLF this morning, right? I heard y'all talking about banks. If I look at XLF, and that's going to map to the Dow, right? Because the number one weighted sector in the Dow is not industrials, it's not transports, it's the financials. XLF is below the 200 exponential, but above it, but the KRE is below it, and it has been for the year. I don't think the KRE has been above the 200 since probably Q1, right?
Yeah.
So now that's going to make me think about, where does KRE affect? Well, I can't touch the Russell to the long side. So I've got to leave that Russell 2K alone. However, the Dow, as long as the XLF is above the 200, so it's going to direct me to a group of stocks. So now I'm looking at DIA. Now I'm looking at XLF, maybe JP Morgan, versus I can't do the same thing on IWM. I can't do the same thing on KRE. So I try to think about the composition of the indices, get down to those top 3, top 4 sectors, and then I'll look at the top 1 or 2 stocks. So as far as when I scan this, I'll scan about 4 dozen names over the weekend. And I like to look, I'm old school. I mean, I'm back, and I know a lot of you guys are. You remember looking at paper charts. I remember getting paper charts in the mail. I love it. I used to friendly up to my post office, so she'd come to my house first and get me my commodity price charts back in the day, those giant, So I still like looking at the chart. I'm not a big fan of sort of scanning the universe of technically similar symbols. I want to look at weighting because we live in a high concentration world.
I remember going down to the convenience store at the Merc. Like I didn't buy it every week, but maybe every 2 weeks. The technical perspectives, I think, is what it was called, and it was these thin pieces of paper, and with all the.
I want to show you something right here. Here, I'm going to show you up at the camera. Here's I got some of these old ones from my friend. This is 1971 Quote America.
Oh,
and look at all the charts they got.
I want to cry a little bit. That's fantastic.
Yeah, this is before computers and the internet. So he was a trader. He's passed away. He was an older gentleman that actually lived beside me. And he's like, when you got these in the mail, he's like, this is the holy grail.
You got bookmarks.
He's like, and then he's like, and he takes them and he would draw, he'd draw the lines and he'd extend the charts. Like, I got a whole pile of these. He gave me all kinds of these things.
All us new kids right now are just like, what the hell is going on?
This is how it was, man. Before, this is how it was. These paper charts, and you got these. Friday,
I don't know if I would have survived in those days.
This was your weekly chart book. So
I'm feeling weepy right now. I'm feeling some kind of way.
Subscribe to that. Look, we can even subscribe. Here's to fill it out. Publish weekly. There you go.
Oh.
All right. So, Raghee, what should we be maybe looking here on pullbacks? Of course, we don't need to be looking at it right now, but at least just what is on your mind as we get in this deep pullback? You're going to start maybe thinking about later in the year, but what's on that outlook?
Let's just survive to end of quarter, right? Let's just keep it short term. To me, it's 1 hour time frame or less, or even better. I've been day trading, 5-minute time frame, get in, get out, be done by lunch, because I don't trust follow through. And even if it's heading lower, short squeezes have been brutal. And if we're going to see a short squeeze, it's going to be that Q3 to Q4 type mentality of let's buy that stuff on sale. Let's have possibly the best ride higher into Q4. At the end of the year, I can show, again, I'm thinking about how money would behave. Are they going to sell into the end of the year? I don't think so. They're going to look for some bargain hunting, knowing that we can really press Jerome Powell with Fed Fund futures. Look, we want our cut back in March or May. So that's what I'm really looking at. Those are scenarios. Unless I see evidence of that in the data, in the Fed Fund futures, and in price action, that's all an idea that I've got to wait for an actual validation of. But keep it short term until the end of the quarter. Start bargain hunting in the first 2 weeks of October.
I'm writing that down. Bargain hunting first 2 weeks of October.
Let's go shopping.
All right. So we're going to end this segment. I'm going to end this segment here in a little bit different fashion, Raghee. Okay. Something I've never done before. Okay. So I know those are real books on your bookshelves, right?
Oh, yes.
Yeah, because I've been fooled by people.
No, it's a Google Meet. It's a green screen behind you.
Okay, and so I know that you probably have a lot of financial books up there, right?
No.
Okay, all right, because I
think maybe 6 or 7, maybe six or seven.
Whoa.
Okay, I know. I'll take a guess who you have a book in there and I can guess an author that people won't recognize. Are you ready? Dara Torres.
Oh. Dara is actually one of my best friends. So
You're
yes,
kidding me.
I've got her and
You're
I have been
kidding
very
me.
good friends for 20 years. Yeah.
You're kidding me.
No, she's so yeah, I've got one of her books on my shelf. She was so ticked off. She came over and said, "Where are my books? Who is Schaubacher? Who is Wyckoff? Who are these guys? Where's my book?" She said.
She said, "You better turn mine and make it face forward. I don't want that, just the binding showing there." That's how you know you really like a book. You turn it around, right, and show the cover.
You go.
Well, you can tell her that I'm just an absolute huge fan of hers. And if you guys don't know who Dara Torres is, then you've been living under a rock. She's a 12-time Olympic medalist and former world record holder in 3 events in swimming, in sprinting and swimming. And if she would offer me, just because of our friendship, a few swim lessons, we could even do it virtual. I would really appreciate it. So I was really worried I was going to lay an egg there, Raghee, but you came up with the save.
I will let her know. I'll pass that on.
Okay. All right.
And here, so you guys could at least get a little connection there. Look at the gold medals. Appreciate you guys.
Wow.
She did it in her 40s.
She's long gold.
She
did
the
most exactly.
In her 40s.
She's the oldest team. Yep, she's the oldest, 41. Yep. And she tried to make the team again at 44.
Wow.
Yeah.
That's really impressive. Being a guy that's trying to play some sports at 32, I couldn't imagine that. So definitely appreciate you like always. You guys check out Simpler Trading. And I also love the morning conversation that you guys give. If you guys haven't checked it out, definitely get her Twitter. Raghee does a nice little morning recap for you guys that you guys can definitely check out. Always good to have you on, and we'll keep bringing you back. It's always you, a lot of people's, you get a lot of love from our chat. I will give you that. I think personally, I need to start taking some statistical data, but I think you might be the most loved out there right now.
The feeling is mutual. I love the energy. Look, anyone who's getting up, sit with you guys, trying to be better at this game called trading, absolute respect. I love retail traders risking our own money, making our own decisions. Mad respect.
Like I always say, real recognizes real. Appreciate you coming on.
Thank you, guys.
All right, let's get back to the market. How we looking, Joel? Still on a leak, or did someone close up that
nah,
put a knot in that hose or something? Because man,
Dennis stuck his finger in the dike there, and 40. I got
to stop going down. I need to sell more stocks. Give me a pop, man. Come on, I'm cheering against what I think, but I want to sell more stocks.
And where are you going to be looking at?
Tech, selling. I like just selling more stocks. Period. I think raising cash. Look at this Apple.
Yeah, Apple.
You can have all those. Remember all those analysts defending iPhone sales look great, man. Let's buy Apple up $5 on that. Where are all those buyers now? Back down to the lows. Kramer saying when it was at 188. If you didn't buy Apple, you're never getting another chance. We got a chance 2 days later, Kramer. It's back down below there. But Kramer's hushing. He'll only talk about his winners. That's an ugly head and shoulders. Apple. Really ugly now.
Yeah.
So not only are the fundamentals just ridiculously overvalued, you're now losing the technicals. So the momentum is gone. See a momentum. You literally have that beautiful uptrend broken. Then you just created this head and shoulders right here too. Like it just stands out like a sore thumb. And Redler, we haven't had Scott Redler on in a long time, but he was tweeting last night. He's like, there are head and shoulders everywhere in this market.
I know.
It's like everywhere. Every chart you bring up, it's like head and shoulders. IWM, head and shoulders. QQQ, head and shoulders. I mean, it's just like everywhere. Now, maybe this is like it's so clean that it's going to go the other way just to screw everyone, and that's how things work. Maybe we're all getting too bearish here. I think you're going to have some pops. I think there's going to be more opportunities. Because never easy on the bears, but I do think like you're adding it all up. I think we're in for a little bit of a rough start, but I agree with Raghee. Have a shopping list, because when we fall another, if we fall another like 6, 7, 8% from here, people aren't going to like that. I think you gotta have, be putting some of that cash to work, because I don't think it's going back to the October lows. And the same reason that I'm not getting super bearish and not 100% cash is that the Fed has all the ammo. When the economy starts to teeter, they can lower rates. So you got the Fed, you'll have the Fed's back again. And that's why it's hard to get super bearish end of the world talk here. We're just trying to take the bubble out. That's what I'm trying to do. Like that's what I'm trying to talk about here. It's like bubble-ish, you know, when Apple's 30 times earnings and Microsoft's 32 times earnings, it's dumb. It's flat out dumb. They don't have the growth that they did before. It's fine to pay 30 times earnings if the companies are growing at 30% a year. When they're growing at 6-7% or not growing at all in the case of Apple, and you're paying 30 times earnings, you're paying too much.
Too much. Dennis, I think and just to add on to your point here, and with the show and what you and I tried to create over the years is, you know, there's always like two sides of the market. Like everyone's like what to buy. You know, we're buying the dip. Where do you buy the dip? And you know, with your, you know, watching the markets all the time, you said this a couple days ago, and you said they're starting to come after some of the winners. So, you know, maybe if you're not super in the buying mode right now, maybe if you're sitting on huge profits on something, you know, look at it. Look at the market environment. And I'm using ELF as an example. I mean, I wanted to short that thing since the gap up in June. Okay.
Yeah.
It goes to 100 to 140. Okay. And now it's back at 105. I mean, the timing of it would have been, you know, impossible. And then we had Todd Gordon on yesterday. I love his analysis. You know, he's in the Celsius Holdings, right?
I was just going to bring up Celsius. What'd he say? What did he say about Celsius?
He said he has a huge profit. He's not selling it, and he's not necessarily buying more. But he has some downside protection on it. But as far as absolutely getting out of the stock, he's waiting for the next earnings report. And then,
but if you're buying puts, you're hedged.
Yeah.
You know, if you have downside protection, maybe you wrote some covered. You know, if you're just writing calls, you're not hedged. But if you're buying puts, you're hedged. So I don't consider that long anymore, even though you have that.
Yeah.
But that's Celsius candle. This is such a great point you're making here. They're coming after the winners, folks. ELF, Celsius, boom, just like that. Lose $20 one day, just like that.
Yeah.
Why? Because everybody's sitting there. Oh, it's, you know, hot. It's the momentum trade. It's what to be in. They're coming after the winners. That's scary when you start losing leadership. NVIDIA lost its leadership 2 weeks ago.
Wednesday analysts going to start chasing here
today.
Oh, what about? Oh, yeah. Great point, Mitch. Go ahead on that.
They all chase to the upside on NVIDIA, have outlooks in the 600s. I think someone even had like an 800 high. When are they going to start chasing that, saying that, maybe AI isn't as big of a driver as they think it's going to be? I think that ARM really is what happened here, right? Let's just be honest. ARM coming in at that valuation is wrecking the party right now.
Lemmings. And somebody's asking, why is the PFF down? I'm going to tell you right now, I said this back when the KRE started rolling over, the PFF. Ago. Remember, I called that, and I was like, this risk reward for the PFF is now setting up the same way that it's possibly one of the worst risk rewards out there. It's full of bank preferreds. It gives you only 6.9%. You get 5.5% in cash, and it's full of a bunch of bank preferreds. You start losing regional banks, you see PFF fall off a cliff. I truly believe that risk reward, because if you short it, you're not going to lose much. But if you start getting the banking problems, this thing could go down quickly. And it's not like it's going to fall like 29, 28. But you can put on huge size on something like that on the short side and not have a lot of risk. So I'm always looking at like risk reward. I mean, what's your risk? The thing goes to 31, 31.5. I mean, if you're wrong. But if you do see banks, you know, it's not a bad play to short PFF as a huge hedge, like a huge short on PFF. So lots to think about there, but absolutely risk reward to buy PFF. I think you're nuts. I think you're nuts over cash. That's my opinion. You're buying PFF for a 6.9% dividend. I think you're crazy, because go throw it in 5.5 cash. It's safer. It's obviously safe compared to the PFF. It's full of bank preferreds, regional banks, all through there. All kinds of regional bank preferreds in there. So if we go into regional banking problems again, PFF gets hammered. But we don't know that's going to happen. I'm just saying risk reward sets up that you can be short this and not risk a lot. You could probably buy puts dirt cheap on something like this. I don't know what puts are going. It's probably dirt cheap because there's not a lot of volatility. But man, if the crap hits the fan in the regional banks, PFF will get hit.
All right, Joel, last outlook on the yes.
Yeah, we talk bearish, and then we're 10 points off the pre-market low. So I lower the I mean, don't take this to the bank, but it could be one of those days where they just whoop it up in the pre-market. They press it down there during the regular session, and we get a little pop and mosey back up. So the only thing I have 44.03 and a quarter. That's your pre-market low. This is one of these days because we've already had the extended range that if it goes through that area, I'm late not touching it on the short side. It could have a quick undercut. Coming back on the upside, man, there's just nothing in there. You got to maybe look at mid-range on the session, 44.22, maybe 44 and a quarter if you're looking for a pop. And for tomorrow, so under the market circumstances of what's been going on, who possibly could be like the best guess to have? Oh, no, wait, that's next week. Oh, wait, I thought he was coming on tomorrow. Nope, that's next week. Tomorrow's guest, well, no, she's still a great guest. Back-to-back calm voices. We're going to have Mish Schneider on at 8:35. It's Ryan Dietrich that's coming on a week from today.
Nice. All right, we're going to wrap it up. Like always, you guys can check out more from Joel Alcon and Dennis Dick. Check them out on the closing print. Give them a nice little follow, guys, at Spoos, Triple D Trader. Always good to have you guys, and we'll have you back tomorrow. All right, wrapping up here on Pre-Market Prep. I'm going to give you guys the outlook of none other than, of course, our Cannabis Capital event. Have you guys checked it out? You guys still can get a chance to get some insights, guys. Don't want to miss it. It's going to be in Chicago, Illinois. So anybody out in Chicago, don't miss this event, guys. Check it out. I want to give you guys the link so that you guys can go ahead and get there where deals are made, group networking events every day, official networking app. You guys can go ahead and check it out. And of course, the hottest after party in cannabis. You guys don't want to miss that. That's going to be on Chicago Thursday, September 28th. Check it out, guys. I'm going to give you guys the link here. And like always, you guys can check out all our events on this website. And we do the best in cannabis. So definitely, you don't want to miss this event. And I'll tell you right now, it's a really hot conversation on what's going on with rescheduling. What's going to happen? Are investors starting to show interest again in the space? Don't miss your opportunity of understanding not only the cannabis industry, but what's coming next. Smash the like, guys. I'll see you guys over on live trading. That's coming up next. Don't go anywhere.